Tesla Giga Shanghai-Made Model 3 SR Plus is now exempt from purchase tax in China. This is good news for Tesla and good news for Tesla vehicle demand in China. In this news update, I'm going to tell you how Tesla is going to benefit from this tax break in China. Welcome back, dear friends. This is Armen Harayan from TorqueNews.com. If you find this report helpful and informative, please give us thumbs up and like this video. It helps me a lot. And also, please subscribe to our channel for daily Tesla and electric vehicle news. Eva Fox reports from the Tesmanian saying the Ministry of Industry and Information Technology of China has exempted the very popular China-made Tesla Model 3 Standard Range Plus for vehicle purchase tax, which will further boost demand. This is going to really benefit Tesla and in terms of boosting demand. On March 10, Chinese Ministry of Industry and Information Technology, called MIIT, released the new energy vehicle tax-free vehicle catalog, which included Tesla Model 3 55 kilowatt hour or SR Plus. This will further enhance the car's appeal, encouraging locals to opt for vehicles of the American manufacturer Tesla. In February 2021, according to the CPCA, which is China Auto Industry Body, according to CPCA, Tesla China sold 18,318 vehicles manufactured at Gigafactory Shanghai, significantly surpassing the sales of almost all competitors. This increase represents an 18.3% month-on-month growth over January sales, which is especially impressive considering February has just 28 days and the period encompasses the Chinese New Year holidays, lunar calendar, I believe, which is almost 1 week. Last year, over the same period, Tesla was able to sell only 3,900 vehicles. The Chinese government has significantly contributed to the development of electric vehicles in the country, steadily encouraging their purchase, increasing the number of charging stations, battery replacement stations, and battery recycling plants. Tesla is at the forefront of positive change in China. The company's cars are in very high demand, which currently exceeds the existing supply. With the purchase tax break or purchase tax exemptions, even more Chinese will be able and to be eager to buy Tesla Model 3. Friends, as I reported yesterday, Tesla is doing really well in China. Especially the Model Y sales jumped 470%, almost more than 3 times in February compared to January. Now China updating its tax rules and giving Made in China Model 3 a new tax exemption will help to boost Tesla's electric vehicle demand in the world's largest car market, in the world's largest electric vehicle market, which is in China. Here are some details from the Nikkei Asia about Tesla and electric vehicle market in China. Nikkei Asia says China's emerging electric vehicle brands have reported strong sales and narrowed losses last year despite Tesla's aggressive pricing strategy to gain customers in the world's largest auto market. While overall car sales have declined for 3 consecutive years in China due to a slowing economy, sales of electric vehicles are still growing strongly. Analysts say more people in China have been enticed to replace their internal combustion engine cars with clean energy models thanks to Tesla's popularity and policy support from Beijing government. Domestic brands NIO and Xpeng more than doubled their sales in 2020 from a year earlier. Li Auto, which started selling its first model in December 2019, reported quarter-on-quarter growth all last year. The 3 companies' US listed shares have surged over the past year, pushing their valuation higher than some of the world's most established automakers. But their stock prices have retreated over the past month as investors reap the gains. Reuters yesterday has reported that the trio are preparing secondary listing in Hong Kong. Looking ahead, however, the local startups are expected to face steep competition from Tesla and more established automakers as they start rolling out more electric vehicles in the Chinese market. Friends, the global shortage I'm sorry, my phone just called. The global shortage of semiconductor chips auto also could considerably conclude the growth of startups and hefty investments required to develop new cutting-edge features could put pressure on their cash flow. Analysts warn about this. Tesla, without question, has helped accelerate the adoption of electric vehicles in China, said Lei Tu, managing director of Beijing-based Sino Auto Insights. Chinese consumers recently reacted by purchasing thousands of its vehicles, and things really took off when Tesla began manufacturing locally. The Chinese government wants electric vehicles to make up 20% of all car sales by 2025. Last year, sales of electric vehicles rose 11% to 1.70 million, while overall sales of passenger cars were down 6.8% to 19.3 million, according to statistics compiled by the China Passenger Car Association. Tesla has been a leader in China since it started selling its Shanghai produced Model 3 early last year. It cut prices for the model several times last year by localizing its supply, making it the country's best-selling electric vehicle before a $4,500 budget car produced by a joint venture between General Motors and state-owned SAIC Motor claimed that top spot in January. I have reported on that Wuling Mini. The US company Tesla also began selling locally made sport utility vehicle Model Y in January at a price about 30% lower than the quote given during pre-sales. Instead of losing customers to Tesla, the top domestic brands in China were thriving under their US rivals' aggressive China sales moves. That's interesting, isn't it? Both NIO CEO William Li and XPeng CEO He Xiaopeng said Tesla's January price cuts have had little impact on their company's orders. Li also said that his company will not lower prices to boost sales, reports Nikkei Asia. Our approach is quite different from Tesla because we would like to make sure we have a stable order performance instead of these ups and downs in the order backlog, he told investors during a conference call last week. He also said, for us, we don't actually want to cut the price to boost the order backlog. Toliver Ma, an analyst at Guotai Junan in Hong Kong, said the strong results of Li Auto, XPeng, and NIO are a good sign for the industry and new players. It means that profit will come eventually, he said, adding that their earnings will continue to improve as penetration of electric vehicles increases in China. While the three companies were still posting losses, their gross profit margins all turned positive last year. Ma expects they will turn a net profit around 2022, or who knows, maybe at the end of 2021. This is the environment in which Tesla operates and gains success. But he warns that the increasing need for capital investment in areas such as autonomous driving, connectivity, ride-hailing, and semiconductors could put pressure on the company's cash flow. So we see only strong names can survive, Ma said. And the top strong name in this trend is, of course, Tesla. The biggest concern for the industry right now, however, is the global shortage of auto chips. Li of NIO said the shortage is having a very big impact on the company's supply chain and limits its production capacity to 7,500 units a month instead of 10,000. We believe for the second quarter, we should have the chip supply to meet basic demand. But the risk is still quite high, he said during the conference call. Friends, having all said this, Lee of Sino Auto Insights believes the chip shortage will not only hurt Chinese EV startups since the problem is industry-wide. Instead, they should be more concerned about the challenges from established car manufacturers such as Volkswagen Group, which will be launching more electric vehicles in the coming years. Yesterday, I had a report saying that Volkswagen and Tesla will be the top EV players by 2025. So it's not the chip shortage, but the challenge from legacy car makers. The China automotive market is the most important market in the world for most legacy original equipment manufacturers. Most legacy car companies, certainly Volkswagen, Daimler, GM, Ford, Toyota, Hyundai, and others, Lee said. So the fact that China wanted to move the electric vehicle forced to automakers to revisit their global product strategy to pull plans for EV manufacturing and kill off ICEs earlier than originally planned, he said. Let me know, friends, what do you think about these developments and about in this environment, Tesla getting this tax break for its standard range plus Model 3. I think the sales will be even better in March. What do you think? Let me know in the comment section below. Please give us thumbs up if this report was informative. I'm sorry that the phone call came and I kind of lost moment there, but please subscribe to our channel. Let's continue the discussion in the comment section below. This is Armen Harayan from torquenews.com. Have a great day. God bless you and be peace with all of you. See you soon.